Hi guys, this is Dr. Sadasivam once again with you. And today I'm going to give you some excerpts of the interview of Vinod Agarwal, CEO of Eicher Motors, in his interview with CNBC. Some of the salient points are covered today. And if you look at the June numbers, the numbers have been good compared to May. For example, the sale in June was somewhere around 2,438 units. But if you compare with sale figures of March, which was somewhere around 5,500, which is a lot less compared to that month, just a time before the second wave of COVID. So that is how it is, and the whole industry was affected in the month of June, and Eicher also followed the same suit as far as Vinod Agarwal was concerned. He said that the quarter one of this year wasn't good for the commercial goods industry at all. Frankly, we must have seen better June numbers, and he hopes that from the month of July onwards, they will be able to see better traction. Of course, some of the salient points that he talked about were the impact of the steel prices. In fact, we have been seeing all commodity prices increasing, whether it is steel, rubber, rare metals, all that they have an impact on the pricing of the truck industry. And yes, it is a sign of relief that steel prices have approximately fallen by 7% during the first week of July, and some softening of prices is happening. And we are also seeing that China is also increasing its production. As a result of it, supply is also increasing. As a result of it, we can expect the steel prices to come down. But Vinod Agarwal feels that there is a lot of pressure from the steel mills to increase pressures. So he feels that even now the situation is not very good, whether it is steel, tire or other parts. And over above that, the inflation is also going completely out of control. Now, as far as the export and the local demand are concerned, while the domestic sales are slightly sagging, but the export is looking better comparatively. Not just here, but in all the other companies, the same trend is saying it is relatively looking good. But if you look at some past years, he shared some statistics. He said that the last year, the export was somewhere around 27,000 only. But if you look at peak times, it used to be as high as 65,000. Compared to that, if you look at the exports during the first quarter, it's just 7,500. It's far lower than the normal period. For example, if you look at the years 2018 and 19, which was the boom time for automobiles, exports used to be 70,000 units. I'm sorry, 75,000 units approximately, right, every year during that time. Anyway, to some extent, he talks about truck rentals, because there was a report from the truck industry that the truck rentals have gone up by 15%. Now, the truck rentals have a very direct impact on sale of new trucks. Not just the multi-axle trucks, but all the others like LCVs and all kinds of these cars. They have a profound impact because all of these are highly correlated, especially because of the infrastructure push by the government of India. Lot of goods movement are happening, and they have also mandated 40 kilometers every day. All that is giving a big push, not just to this industry, but to all the allied industry. And that's exactly, we talk of accelerator effect. I've already put a special video on this, which I request all of you to go through that. I will also be putting a link down here. So now coming back, the truck rentals have gone up, and that's a good sign as far as the transportation industry, that is the LCV industry, is concerned. But if you look at the rentals even now, even after this inflation of 15%, it is a lot less compared to the inflation in the fuel prices. For example, if you look at the price of diesel in the last 15 months, it has gone up from 60 to 90 rupees. For example, if you look at heavy duty operators, the average fuel range would have gone up to 75 to 80,000 rupees more. So considering that 15% price increase in truck, which is not being talked about, is not much at all, because if the transport industry has to go up, and if you want that it should not fall sick, the rentals have to go up. Guys, let us do a simple back of the envelope calculation. 60% of the cost of ownership of any transporter is fuel. So in this 60% of the cost, if the fuel goes up by 50%, the diesel cost from 60 to 90, right? Your overall prices have to go up by 30%. That is the equation. But if you look at the equation, rentals have gone up only by 15%. So it has to go up by 15% more, just to ensure that the transporters are able to keep their head above the water. Otherwise, they will all become sick and they won't be able to pay installments to finance companies. They won't be able to meet their financial obligations. They won't be able to place new orders for trucks with the OEMs. And it's a vicious circle, one leading to another, and the industry cannot sustain. So if the truck transporters do not get good prices, they won't be able to progress. So that is one great issue. Now, speaking about the demand and supply problem, Vinod Agarwal feels that it's more of a demand problem. Yes, supply side constraints continue to exist, but demand is a greater problem, because he's confident about the economy going up. It will push up the infrastructure. It will push up so many other schemes. Government is introducing a lot of schemes. We can hope that the GDP will go up. So with the economy go up, the demand for LCVs and trucks will also go up. Needless to say that when the economy moves up, movement of goods also will take place, and some kind of a virtuous circle starts getting in. There are regional variations also in terms of trucks. For example, the issue is still pronounced in south because lockdown still exists in Tamil Nadu, Karnataka, etc. Of course, north and west have become normal. East is doing average, but all said and done, one thing is that is conducive is that the construction sector is doing extremely well. The government has mandated, we have already discussed, mandated 40 kilometers of road construction every day. These are government mandates. Government is doing a great job. So all these will push up your infrastructure sector, which will push up good movement, which is good for trucks. And as far as the margins are concerned, they continue to face pressure. Transporters are not very prosperous, so they are not able to pay a good price, and there are severe negotiations happening between the companies, OEMs, and the truck operators, and there are pressures because of commodity price increase. Your BS6 compliance has increased the prices, your steel, tire, palladium, rhodium, all these OEMs, as a result of which a lot of things are happening. But companies have still been able to preserve their profits, especially as far as Eicher is concerned. That's probably because of the best manner of cost and price management, right? They have put their full focus on both cost as well as price, because both needs to be balanced very well. In the words of Vinod Agarwal, generally it is felt that in this year the GDP growth will somewhere be around 10%, and when the economy moves up, the demand gets generated for movements of goods, and trucks are very dependent on the auto sector also, right? So all that, the future seems bright. Auto sector is also very important. So with the auto sector improving, the goods movement, both in terms of raw materials used for cars and also movement of finished automobiles, all that will help the truck industry. So the auto sector growth will also influence the truck sector, because most of these cars produced are transported through trucks. Of course, other things will also keep improving. So the demand, which is at a low ebb right now because of so many other factors, we can hope that the sector will pick up in the months and years to come. And Vinod Agarwal is very, very confident about that growth, and we will come out with lots and lots of interviews with corporate honchos who give you valuable information in terms of what is happening in their industry. And along with that, we will also try to see whether there are theoretical underpinnings in their interviews. For example, I had taken up this example of three-box strategy in one of the interviews with Dr. Pawan Goenka and Rajesh Jajurikar. They always talked about this three-box framework, and in one of the interviews by, I think, Gopal Mahadevan of Ashok Leyland, he was talking about a beautiful concept of how they manage their top lines, their bottom lines, and the middle lines, in which he talks a lot about cost, management of costs, how they do all this improvement in productivity, etc. So apart from what is happening in the industry, we will also be taking up specific points from that and look at some of the theoretical concepts, which drive all those strategies. Because as a trainer, I'm equally bothered about what is happening as a strategy from an implementation perspective. But at the same time, my eyes are fixed at the theoretical frameworks, right? Because that's very, very important for a trainer in terms of creating the right case studies, etc., which are normally discussed and debated extensively in our leadership training programs. I hope all of you enjoyed this presentation, guys, and this is Dr. Sadasivam signing off. Till we meet again. Bye bye. Jai Hind.